momentum trading in 2020. We all joke about Robinhood, but the reality is Robinhood is leading this market. It is the buy and hold type of strategy that's working. Everybody that panicked on the pandemic now is really, hating themselves, and people have basically been trained that you just never sell. It all works out, right? And the thing about momentum trading that has changed is it is such a lesson in economics where it's all about supply and demand, right? We have millions of new traders. We have traders at home that they don't have their bosses over their shoulder asking them what that trading platform is. What are you doing? About to get fired. You have all the degenerate gamblers. You've got Dave Portnoy from Barstool Sports with his whole crowd trading, which is absolutely awesome. I love it. But there is just so many new accounts. You've got Schwab and E-Trade opening $2 or $3 million accounts per quarter, which is insane. Just do that out by maybe $100 per account and think about the inflow of cash that's coming into the market. So that's what we're up against this year. It's not like before where, there's a little bit of momentum, it gets hot for a little bit, and then it kind of fizzles off. It's not like that anymore. What it is it's just demand. And if there's too much supply, not from the company, but too much supply from shorts, we get some crazy move. We've seen some 200, 300, 500, 10,000% movers this year. Things that we've never even seen before. We've had SPI from $3 to $45 in the same day. We've had Kodak from, $5, $6, $7 to $60 on millions and millions and millions and millions of shares traded. That is, a trade that could potentially make a trader. And unfortunately, it's also one that could break a trader. So, 2020 has been a year of record-breaking, both P&L to the upside as well as potential losses. I know that I've had my biggest loss ever in 2020, but it was just a small percentage of where I was at on that month. It's amazing to be happy that it was only X. But the reality is as you progress as a trader and as you carry on through this journey, you are going to continually be faced with lessons, and it's just all about how you react to them and how you overcome them and how you come back from them. So, that's been the main difference for me anyway, as far as momentum, is adapting. And what worked yesterday may not work today. And even, I talked about the supply of, maybe not from the company, but from shorts, right? So supply and demand. If there's a lot of demand and less supply, obviously the price is going to go up. Now, typically companies would raise money, right? They'll drop an offering at a lower price to the market. But now they don't care. There's still so much demand that it just absorbs that entire offering. So what would have been a nice short before, be patient, let the trade work, is now just absorbed, and that next secondary move is off the backs of the shorts being squeezed. So, that is something in my own realm where I've had to adapt in a big way. Being overly patient. The faster that you recognize what's been happening over and over and over, the faster that you can fix it. And I think Tim Grittani and Dux were talking about, looking for those similarities, looking for that, what happens 60, 70, 80% of the time. And you can go back and look and review your trades, and that's really where your focus should be, is going back through these trades and what happens most of the time. Where is the edge? And what should it do? And by doing that, you're going to increase your edge, increase your odds, and ideally be more profitable. Next up is come prepared or don't show up, right? And so I'll give you a real life example of, what happened to me. I'm coming off the best year of my life, my career trading, and I started to underperform. And, the trades were there. I felt good. I thought I was seeing things correctly. And, I just started second guessing myself. I started overstaying. I started kind of not attacking particular names as I normally would have. And I started to kind of refocus and rewind a little bit as to what could be causing that. And as a lot of you guys know, I had my second kid, a son, in May. So around the 3.5, almost 4 month mark, I just hit a brick wall. And I've just been doing everything between trading, videos, and going through, burning the candle both ends, waking up, giving my wife a break at 5 a.m. to 8:30 a.m. and literally leaving myself about 20 to 30 minutes to prepare. It's not enough. It's not enough at all, especially when there is such high caliber plays, and you really need to investigate which ones are going to give you the best edge. Whether that's through filings or looking at the daily charts, getting a feel for what the potential is there. And I just wasn't firing like I was the rest of the year. So what I found out was just that I'm just exhausted and I'm not prepared. And so over the last month and a half now, my mom she lives close by, and she's been coming in the mornings and basically giving me those 2 hours of preparation back. It's been the best thing ever. Trading has picked right back up, but it just goes to show you that if you treat this as just a hobby, if you just show up, you're not going to get anywhere. You're going to just tread water, right? And another example is our chairman, Helder. He's another great guy, which I'll get into in a few minutes about a little bit of his history. But, for example, for him, it's all about screen time. So he's making progress, but he wasn't in the market. He wasn't watching the market every single day. He wasn't getting those hours of, you may not think you're getting a lot of information, but you are. You're absorbing so much stuff when you're watching tape, when you're watching how certain things react to certain news articles or volume, etc. So he saw a major uptick in his trading the more that he was at his computer in the mornings. The more that he put 3 hours, 4 hours into it versus just trying to show up at X time and having only an hour to trade and trying to find something. You're just underprepared. So it's all about getting prepared. The second part about this is being vocal. Be verbal, right, with your trade plans. Now, personally, for me, a lot of you guys know I do Sunday scans. And I also do a pre-market broadcast at 8:50 a.m. every single morning. What does that cause me to do? That causes me to look at hundreds of charts, condense it down to a dozen, and then every single morning it forces me to condense that list to 2 or 3 main watches. And that's all you should be focused on. The more you verbalize it, the better I think that you'll trade. You can even talk to yourself and just say it out loud, because later on when you're about to trade the name and it's not to your plan, you'll be like, the heck am I doing? That wasn't my plan. I said I wanted to wait for this to happen. Meanwhile, you're just jumping in and, it could be 50-50. So verbalizing it, saying it out loud, having a trading partner. There's a couple people that I just text in the morning and say, what's your top 2 watches today? And just by getting prepared and zoning in on those 2 names, it alleviates so much of the noise and allows you to focus and stay prepared. Another piece is, what's your goal at doing this, right? What are you trying to get out of this? And so once again, I'll go back to Helder, and he started a construction business, general contractor, to fund his trading career, right? His goal was to be a trader, but he knew that he can't just, okay, I'm going to be a trader today. It's not how it works. So he created this business to supplement his income, to give him the best possible chance at success. So we were talking about it, and there's so much noise on Twitter. There's so much noise out there. Somebody's always going to make more. You guys know that. And that guy made $1 million, that guy made 10 million, so on and so forth. But what was your goal? Your goal was just to start trading and be able to supplement or overstep what you were making on your construction business. And yes, you can always continue to grow as a trader and continue to get better, but don't lose focus on what your goals were, what your true purpose was. Because otherwise you're going to start firing and you're going to start going downhill. And had you not had that outlier, had you just been a hermit on your computer and doing what you wanted to do, you wouldn't have had those outside influences to get you off course. And you would have replaced all that income from being a contractor and you'd be happily trading. But because these outside forces are there, you feel like you're not there, you feel like you're not good enough, you feel like you should be doing better, and because of that, you start going downhill because you're leading away from what your entire purpose was. So that is an example of Helders, as well as somebody like myself. I've talked about this on a video before as well. I don't care about Lamborghinis. I don't care about all this crap materialistic type stuff like Tyrone or I think was the one that mentioned it, wearing Gucci and all this kind of crap. Who cares? The goal isn't to look rich. The goal is to be rich, but rich can be different things. It could be building wealth over time. It could be memories and time with your kids. It could be, and in my opinion, the most important part is collecting those memories. Collecting the memories over time instead of all these different, assets that aren't going to, go with you. So for me, that's what my purpose is. And any time that I find myself kind of veering off and that guy made $1 million in it. Yeah, that guy is on 50 million on the year. Yeah, it's noise, but you need to rezone in and focus on what you're prepared for, what your purpose is, and where you're headed. And last but not least, on this particular subject of getting prepared or not showing up, make sure that you have an elevator pitch. If I were to ask you, hey, what do you do? Tell me about your trading. What is it? How do you make money in the market? And for me, that to me is that I continually monitor and scan the market for outlier moves, outlier volume, and take advantage of those market inefficiency. And my goal is, as primarily a short seller at times, to let that trade exhaust out, squeeze everybody out, and then I look to pick up the pieces. I don't need to be a hero and find the top. I let everybody else find the top, exhaust out, and then I look to come in. That I can tell you quite simply what I do. Otherwise, if I wasn't able to quickly come up with it, how can you know what your trading strategy is? How can you know what your true purpose is? How can you get prepared? So if you stick with your game plan, I know that there's a lot of outside influences, but if you stay prepared, stay on course, you're going to see a lot better progress in your own trading. Next thing I want to talk about is the next mentality. Win or loss, you should be moving on to your next trade. A big win should be expected. It means that it's proper process. A big P&L is the result of proper process. So the sooner that you can get back to equilibrium, the sooner you can focus on your next trade. If you're too heightened, if you're too excited, then you're going to go in making bad decisions based off that prior trade. For example, if you're coming off a career trade and you think that you can't lose and you think you're going to use the same size on the next trade just because you've got a padding, guess what? It can quickly go away just as fast. So make sure that no matter win or loss, you use the next mentality. I'll share with you a couple examples of that on a loser just to make you aware of the importance of being able to move on. One of the most, I would say, impressive traits of my friend Eric Wood was, or is, his ability to bounce back anytime that he hits a brick wall with a particular trade. There's times that we're all stubborn, and sometimes you are going to have that stubborn loss. It's all about minimizing them as much as we can. So for example, one thing that I've always admired about Eric is that ability to, just reset the next day. Meanwhile, I'm over here, I'm not over his loss yet, and he's already on to the next trade, and he's already, capitalized on whatever opportunity there was that day, and made it all back and then some. And so I took that away from him. One of the things that I talk a lot about is being able to take away different things from all different types of traders and apply it to yourself, and really create your own trading arsenal. Nobody is going to be 100% the same, but you can all take a little bit and really mold into the best trader that you yourself can be. So that's one thing that I took from him, and that's one thing that I try to share with others. Two recent examples was, for me personally, yeah, it's been a career year, but guess what? I had my biggest loss ever. And did I ever think that I would have a $1 million plus P&L swing and end the day down 7 figures? No. Did I ever think that I would make that back in 3 days? No. But it goes to show you, the faster you reset, the faster that you can come back from whatever you faced that, in this case, was not good. And I think that it's important to understand that the markets where sometimes you get a little complacent and you get ran over on the short side, or maybe you overstay on the long side, the same markets that take also give. Another recent example was Stan from 7 Points, who had a stop out. He was trading a particular name, and he ended up hitting his max stop. So he immediately kind of tweeted out that he was going to take the day off the next day, and if and when he did take the next trade, he was just going to kind of slowly crawl back. And I just responded to him and shared with him what I've learned from Eric. And that's the wrong strategy. You have to have trust in your process, trust in what you've done. Look at 2020. Look at that chart. Look at your P&L curve, and look how you've traded. And you need to trust that the numbers don't lie. And yeah, you had a loss. Yeah, you got complacent. But at the end of the day, if you continually do the same thing over and over and over and over again that you've done in 2020, it's gonna be okay. So the next day, he ended up not only recovering that loss, but also made quite a significant amount more. And the cool part about that is, once again, as much as we get a little bit nervous after a loss, it is the markets that take also give. So always remember that anytime that you get ran over by something, it's because there's outlier range. And when there's outlier range, that's when it's time for you to shine. Last point here is to always come back to doing what you do when you're trading well, right? Typically, when we have a loss, we tend to overstay. We tend to not take losses. We tend to change our plans. When I'm trading well, I am taking gains into the anticipated move. I am cutting off losses so that I can focus on what is a winning strategy. And I am not changing my plans. I'm trading the plan and moving on. And again, when I'm not trading well, I'm expecting a potential move. That move happens, but then there's something in your mind that says, hey, well, we're right. We might as well see if we're more right. But that wasn't the plan. And there's nothing worse than going from being up on a move that you anticipated to right back up to where you were and, turning it into a loser. So always have that next mentality, always reset, refocus, and just come back for the next trade. All right, guys, so for the last part of this segment, the last point that I have here, I talked a little bit about trading strategy, trading psychology, and the proper mindset to be in. However, what I wanted to talk about here is something that you can literally take from this presentation, take a few notes, and apply it to your trading as soon as tomorrow. And that's what I always like about these types of events, because I'm always learning, you can always learn, and you can always get better. The goal is to always become a better you than the day before, right? And nobody is too smart to learn something new. So for me, I wanted to talk about the strategy of looking left, not necessarily for entries, but also in the case for me, I like to short sell. Now I go both long and short, but this particular section, these examples, I'm going to talk about how not to get ran over on the front side of the move. Now, I've learned plenty of times how to get ran over, but I've since employed different strategies to help me from getting ran over on the front side of the move. And one of the biggest things that I want to focus on is volume. Volume always trumps all. Always remember that. And so when you wake up in the morning and you see a stock gapping up, in this day and age, I mean, typically we have a couple 100 or 200% gappers these days, but for the most part, 20, 30, 50, 100% type moves on heavy volume. Those are the types of moves that I'm talking about. Now, what I want to do is pull up the daily chart and look left. Find out what was the last biggest volume day on the daily chart and what was the range. Right away, I know that if it's starting to run pre-market, I want to at least have an open mind that it could potentially go back to that prior top, because we're tracking for a very high volume day, but that doesn't mean it's going to break it. There's a good chance that it won't, but I want to prepare for the fact that it will. And I'd rather somebody else short it because it's up 100%, get ran over to 150, and so on and so forth, and keep on going. You guys know exactly what I'm talking about if you trade momentum stocks. It's been a wild year, and you know we're waking up to daily 200, 300% gappers. We've even had a couple 1,000, 2,000% runners this year, which is really abnormal, but I'm not complaining. Now, the ones that I want to go over today, I'll give you a couple examples, but for example, WATT. It's a very known company. Everybody's waiting for the iPhone. I guess it's going to be the iPhone 13 now. Everybody's waiting for them to be included in the iPhone. I think it's been about 10 years now that they're going to be in the next one. But at any rate, this particular trade, I want to look at this high volume day. And this high volume day has about around a 420 level that was the top on the high volume day. So any day that it gaps up, any day that it has higher than average volume, that it's running, I want to assume that it's going to at least potentially test that level, but I also can assume that it's going to have trouble there unless it starts to get over 100 million shares traded. And in which case that becomes the new day that I care about, right? So anytime that the volume is tracking for a higher volume day than this daily, that is the day that's going to take over for the next time, right? So the next time this stock runs, I'm going to look at that next highest volume day. So in this case, it ran up, and guess where it ran into a wall? It ran into a wall at the same level that it had a 100 million share volume day. So that is how I used that strategy on anticipating this potential entry on WATT. Now, again, like I said, you should not assume that it's going to hold that level. A lot of times it might go higher. It might take time. Pre-market could go a lot higher, but then once the market kind of calms down a little bit and throughout the day, it'll find pressure and find its way back under that level. But most times, it's going to peak out at that level unless the volume overtakes that prior day. Another example, looking at this daily chart, MDGS. MDGS was a big pre-market runner. It ran up to almost $4. I think it was actually a little bit higher pre-market. But where can you expect that it could run to, number one? And number two, where could you expect that it would run into some type of resistance? Once again, you look left, you see this highest volume day. But we now have a new highest volume day to now pay attention to the next time that this runs. You can see here that the 4 level held. You can see here that it also had a little bit of trouble in the mid 3s. But pre-market, it started to churn, started to run 250, 350, but I knew that I did not want to get bent or anticipate it peaking until it at least tested that prior resistance point from the highest volume day, which was in that 4 level daily chart resistance where it's peaked out 3 times. I know another example. I know in this particular instance, you can see where there is chart support. So the more times that it bases at a particular level and then it finally breaks, well, guess what? When it comes back up to test those levels, there's a good chance that this support is going to have a lot of inventory in the way. Again, it doesn't always just stop there, but there is a good chance that it's going to have trouble there. There's a good chance that it's going to fail. Or if it does break, there's a good chance it's going to unwind back to that level. And that's the point here. Another example recently, PED. PED was $4 pre-market. You can't see that here. But I knew not to get involved pre-market because we've got the highest volume day, ran up to about 250 and unwound on about 100 million shares traded. So unless we're tracking to trade over 100 million shares, there is a good chance that that's not going to be sustainable. So in this case, yes, it went 354 pre-market. It's in much thinner tape. But by the time the market opened, by the time the real market was there, we found resistance, we found pressure at that same level of the 100 million share day, and then completely unwound from there. Once again, I'm not here saying that it was an obvious short at 250. What I'm saying is it was obvious not to get ran over when it went 150, 172, 250. You want to let it exhaust out everybody. You want everybody to find out the top, but know in the back of your mind that there is a good chance it's going to find some resistance, some sellers, some inventory at 250. Ears, you saw this trade, the entry on the video that we did with Centerpoint yesterday. And you saw that it was over 160s, 170s, all the way up to 190s pre-market. Yes, the news, it was up on news that wasn't even for this company. It was a big misunderstanding, but that's not the point here. Where is it likely going to find resistance on the daily chart? And that answer, you can see very clearly, is in the 135s. Same thing, WKHS. In this case, you could even apply a long strategy to where there's support, both at 15, both at 23. But then, most importantly, the day that we had a really big gap up, we had a huge run off the lows, 23 to 25 to 27. Next day, it gapped up and broke out. Where did it break out to? Look left, it hit the same resistance point and then unwound from there. UONE, very similar situation. Where was the highest volume day? The highest volume day was up towards about 650 back in May, June, I guess August. And then once again retested that level. And then an intraday example. Looking at this trade intraday rather than the daily chart. You might have some entries, you might have some trading ahead of time, but what is the level that you want to pay attention to on an intraday level? And you can just draw a line right across, right here, and see that if you looked left, there is a good chance that it fails at that level. You should not assume that it's going to fail at that level, or at least have room to be wrong in the event that that level does not hold. I like to scale after it fails, after it proves, and that is the difference between jumping in on the front side of a move and being on the right side of the move. And I hope that this helps a lot of you guys, especially those who are trading small caps, momentum, might have shifted towards the short side of trading. Everybody goes through the same troubles with small caps. Everybody gets squeezed at some point. And this is one strategy that I have started to do, or at least apply to my own trading, that has helped me a lot. And it has prevented me from being on the wrong side of the trade a lot. So once again, thank you guys for watching today. I hope that you guys have some key takeaways. I hope that you can apply this to your trading as soon as tomorrow. Thank you so much for coming out today.